My name is Max Gagliardi, and this is a Talk Energy podcast. If you're watching this video, take a moment, hit the subscribe button on YouTube, or you can follow me on your favorite podcast app. This episode's guest is Mike McGlone, the senior commodity strategist for Bloomberg Intelligence. Mike has a background as a trader and brings a macro perspective to commodities markets analysis. This episode's filled with discussions around where the commodity markets are at and where they're likely to go. We talk about everything from crude oil to Bitcoin and why Mike thinks oil is more likely to hit $50 than it is $100 a barrel in the near term, and why he thinks Bitcoin is more likely to hit $100,000 of Bitcoin than it is $20,000 of Bitcoin. And oh, by the way, he thinks everybody should own some in their portfolio. We talk about the long-term deflationary effects of crude oil and natural gas, and why Mike doesn't think prices are going much higher in the long term. And lastly, we talk about the Fed's recent guidance last week, and why it may seem like these policies are causing commodity prices to go up, but the reality is they're causing the value of our currencies to go down. Hope you enjoy the show. Mike, welcome to Talk Energy.
Max.
Thanks for coming on the show. You know, there's you've been putting out a bunch of great stuff, and I'm really enjoying your notes. And you're doing a great job selling the Bloomberg terminal, because every time you put something out, you're always saying, "Hey, follow up on the terminal, and you can read it." And so I just thought, you know what, I don't have a Bloomberg terminal, but maybe I could get you on and we could talk in more detail on some of these topics. And there's a bunch of things we can cover. I mean, obviously, I'm in energy is my background, and I think you do a lot of good commentary on the oil and natural gas markets, and we'll hit on that. But I think there's some other just kind of broader themes, and I think maybe just to start, just kind of the Fed this week and that meeting and the guidance that was given. And I've seen you talk a little bit about it on some of your posts, but just your general thoughts there, and then we'll dive into a few.
Well, I appreciate that intro, and I think you've got the perfect voice and looks for this, what you do. And if there's any way I can get my managers to see what you just said about selling terminals, that's perfect. But it's kind of a unique thing what I do here. I mean, you can see from my hair, I've been around a little bit. And what I really enjoy what I do at Bloomberg Intelligence is I'm neutral. Bottom line is you'll see my eyes darting back and forth a little bit because I got the terminal in front of me, and I'm just got this wealth of information. Just, you know, for when you're addicted to information like a lot of us are, and you and me and anybody's listening to this and watching this, it just absorbs you. But I'm neutral. But bottom line is reporting and publishing for people in the terminal so they can make their investment decisions, and then it trickles down. And to me, what we're doing is just the fun part. It's like show and tell. So I appreciate that. And the key thing I take away from the Fed is they're taking away the punch bowl. No, they're not taking it, but they're warning they're going to take away the punch bowl. I don't think the energy market gets it yet. So it's a very simple narrative. And I remember I've been trading, that's my background. I've been trading long bonds and treasury bonds and treasuries since I got into business in the 80s in the Chicago Board of Trade, trading bond options. and what the Fed did, and this is my take, so all your views, all the views you're going to hear are completely me. They just did a classic prudent thing that needs to be done from the Fed. Is they said, all right, they're looking at the market and saying the stock market's the highest ever versus market cap. It's most stretched above the 60-month moving average, 5 years, about 45% in 20 years. And VIX is down very low. Okay, so we have to start trying to prick this bubble. We're not going to raise rates. We're not even thinking about raising rates, but we just gave a little hint that we might raise rates.
Right.
And to me, what they're doing is they're warning they're taking away the punch bowl. And the key thing, the bottom line that matters is the stock market. It's the only thing that matters. So if the stock market wasn't up 12% in the year, they wouldn't have said that. And it's only June. If it was down 10% in the year, it would have been nothing but, we're not even thinking, it would have been nothing but liquidity. It's just all that matters. And that's why I want to relate that to energy. Got to point out, I'll point that out in correlations and everything, and copper, in crude oil. Everything changed in 2008. And all that really matters, I mean, yes, supply and demand matters, but if the stock market just simply gives up a little bit, which I'm afraid it's going to, I think it's overdue now because the Fed is already kind of warning us they're going to take away the punch bill. Crude oil will drop at double the velocity of the stock market. Now, as we're speaking, this is Friday. We're going to post on Monday. Crude oil's up a little bit. It's doing well. It's hovering. The way I see that market and related to the Fed is crude oil is half the price it was in 2008. So that's still bear market, big picture. And there's a reason for that, because supply is exceeding demand on a global scale. And we're back near the upper end of the range, and everybody's optimistic about demand. It's not coming back yet. They're optimistic about it coming back. And now we have this little tweak from the Fed kicking in. So I view this crude oil market as very vulnerable. I'm clearly bearish. I've been bearish a little bit too early. I admit that. But it's just the trend's your friend, and it's not favorable for crude oil in the bigger picture and in the shorter term. So I look at it as a trader, macro manager. WTI above 70, risk going back to 50, and it's very unlikely to get much higher, particularly if we get what I think is happening is finally, let's say if you get a little 10% correction in the stock market, oh my gosh, imagine that. That used to be normal. Crude oil is dropping 20 to 30%.
Well, it's interesting because I think the take that you're given is, I'm glad that you have that take, because I think it's different and opposite of a lot of people that I've talked to. And I'm more bullish on oil, and we'll get into that here in a second. But you hit on a few things before we get into the oil side of it that I want to talk about. So you said the Fed just cares about the stock market. I think a lot of that's true, right? You know, if things are going good on that front, it makes their job easier. There's less pressure on them. In theory, it probably shouldn't matter, but that's the reality. And so, you know, when they're signaling what they're signaling, I thought maybe, I guess I wasn't surprised. I mean, in my mind, I'm thinking it feels like things are heating up and maybe heating up too fast, but a lot of that's, you know, I pay attention to a bunch of different markets. I'm involved in real estate. I'm involved in the energy markets and do different things. And, you know, you see the price increases and you feel it. And so I guess I expected them to say that they were, you know, would consider raising rates, but, you know, you throw out things like 2023 and maybe as early as next year. But, you know, I guess if things keep on the same pace that they're at, is that going to be fast enough to cool it off? But I've also seen you put some things out about some deflationary stuff that could happen. And so it just is, it's about what you would expect from them. But I'm surprised that, at least in my mind, it seems like things are moving faster in terms of prices going up. But maybe I'm off there. I don't know. I guess it's about par for the course of what these guys would say. They're not going to veer too far from.
Well, here's a fact: commodity prices aren't going up. Currency prices are going down. Dollar value is going down, and not just dollar, overall currency.
Yeah,
and that's my headline I pointed out a few days ago, and it's just a fact. So let's look at the dollar price of WTI. $71 a barrel. You see my eyes moving a little bit on the screen. I'm looking back in my screen. That's the same price as 2006. That's called deflation. That's the dollar price. You know what? Money supply's gone up there. It's since 2006. It's tripled. QE. You know what the stock market's done since 2006? Crude oil. That's a horribly deflationary market because we're creating more of it. We use less of it.
Right.
And back in 2006, the U.S. was a net importer of 10 million barrels a day. Now we're a net exporter. And the whole world's following us. The total amount of liquid fuel we use in this country is exactly the same as it was 2006. Total, you know, it's around 20 million barrels a day. Why? Because we're more efficient. That doesn't even include EVs. So that's the bigger picture. And the other picture is all the currencies in the world are declining together. That's kind of where I get the cryptos and gold. So if you look at crude oil divided by the price of gold, which is kind of true money, it's clearly deflationary because gold is just reflecting its debt to GDP and its value in dollars. And to me, that's what people are forgetting is this is an extreme example in history. Yes, some commodity prices have gone up this year. They've bounced. But that elasticity of supply is kicking in. And that's where crude oil is in just a bad space. It is it's a high elasticity supply commodity, like not as elastic as corn and soybeans, but it's close. And just think every tick that goes higher. So I'll point out the fact here, there's more incentive production. So right now, my database going back to 2014 shows the average cost of production for U.S. shale is $40 a barrel. And we had the highest price versus that cost of production since 2014. It's like 75% above the price. So, okay, maybe ESG is an issue, but if you look at simple supply-demand economics and a little bit of capitalism out there down there in Texas where you get her done, there's more incentive to produce crude oil ever. And then people talk about backwardation. Well, yeah, I tell you, of course they're backwarded because producers are selling forward in the curve to lock in profits and sell. So that's why I look at it and say I can show you numerous reasons why that's one key reason I'm bearish crude oil, because demand has been flat, supply is going straight up, cost of production going straight down. It's down 40% since 2014. Cost of production is going down, yet the more dollars chasing that cost is going up. That's deflation. So to me, that's the big picture people aren't getting about commodities. So yeah, I'm on a bit of a rant because I think the only thing that matters now is the stock market has to go higher. It absolutely has to go higher for commodities to stay stable. Look what copper recently peaked around $10,000 a ton, and China gets it. China can control that market. Why? Because they know that's the same price as 10 years ago. Imagine if we made that quote, oh, the stock market just got to the same price as it was 10 years ago. If we have to say that in the future, significant deflation. To me, that's what we're fighting right now. And that's why the Fed has got to be very careful. But if the stock market goes down, the whole tide goes out, and crude oil is one of the top of it's one of the top boats to go down.
I love the point you make around the money supply with crude oil, because when I look at things, you look at the time periods, and I work really closely with natural gas too, and you look at like inflation adjusted for these things, you're just treading water for decades in terms of where you're at. And, I think you put out a note that said nat gas is like maybe 3 decades. It's been around the same inflation adjusted price, but same with crude oil. I mean, you think about it, when it peaked and it had the run up back last decade, or almost, I guess, the 2000s, it's like 2 decades ago, but it had that run up, and that was, at a different, there's been a lot of time between now and then. So to get back to those same levels, it would, I don't know what the inflation adjusted amount would be today, what that number would be, but seems like we're still way far behind. So I hear what you're saying there, and it makes a lot of sense, but I still just feel like maybe it's just my inner wanting to be bullish because I work in the oil and natural gas industry, but it just seems like the flight of capital, there's been such a flight of capital, and you had this huge investment in North American shale, and that was driving a lot of the swing production. And then you look at what OPEC's doing, and we can talk OPEC game theory a little bit here in a minute, but you got the flight of capital in the U.S. You've got supposedly they're going to be capital discipline. You got the big ESG movement, and then you've got OPEC, who in theory has capacity and will raise production. But okay, you raise production X amount of percent, but shoot, the price may go higher at a higher percentage up if they don't raise production. And so there's a lot of factors at play, but part of me says, my gut tells me OPEC will probably let it run more than people think they might. Just because it costs money to increase production, and it doesn't cost money if prices just go up. You actually, there's no marginal cost there. And then I think U.S. producers are going to struggle to have the same amount of production growth that they had, given the flight of capital and now the capital market discipline and the stuff that's going on with Exxon's board and all these other boards. But just where's my foul? Well,
I love that
narrative on those points?
I think it's decent, but here are the key things that we need for crude oil to stay higher. First of all, we are just assuming OPEC's going to stay disciplined. It's a new thing in the history of OPEC. This is wonderful, but they have the largest spare capacity in the history of OPEC. Compared to global demand, it's the largest ever. 9 million barrels a day, got to 10 for a while. It's the largest ever. Expect that to stay? Sure. Crude oil will stay buoyant. So we need that to maintain. We need demand to come back to where it was before. I look at unleaded gas demand compared to 2019. Just use 24 in U.S. this driving season. It's down about 5 to 6% from 2 years ago. Can't compare to last year. It doesn't make sense. And the U.S. uses the same 9 million, well, now it's about 8 million barrels a day of unleaded gas a year as we did 10 years ago. What does that mean? It's only exactly. And what's going forward? I drive a Chevy Volt. Next 10 years, F-150. It's all going electric, and that's the key thing. What happened with this new administration? The U.S. was pushing the gap back with Trump against organic trends in rapidly advancing technology, increasing production, and reducing demand. And now we're pushing it forward. So to me, that's the key thing. But the other key thing that we need for crude oil, stock market has to go higher. Demand has to come up and return. I don't think it is. And I've looked behind me. There's no one in the office. They're not driving. They're not commuting anymore. The world changed in 2020. And to me, those are the key factors. And then I look at things like copper. It looks like it's already peaked. Copper and crude oil, they are two most important macroeconomic commodities. So I just love this. People want to be bullish crude oils. I think another key reason it's going up is because people have been investing in commodities and commodity indices. And having run that business, most of those are energy and petroleum, and they're buying the wrong stuff. I say if you're bullish, you want to get hedged against inflation, go to metals, most notably precious metals. You got to have Bitcoin in there. Why? Because Bitcoin's replacing gold, and that's part of that rapidly advancing technology, which has pressured prices since the history of mankind. So I'll end on this note. When I was at Bitcoin 2021, there was the smartest person I met there. Well, among the smartest was a guy named Jeff Booth. He wrote the book, The Price of Tomorrow. And he's a Canadian. He's just pleasantly modest. He's such a wonderful person. He's just smart as hell. And he nailed it, I think, in this book. And so a lot of stuff I write, I point out, nat gas, the same price as 30 years ago. In terms of gold, it's down 80%. Why? Because the U.S. is creating so much. We can't even keep up with. When I was running commodities at S&P 10 years ago, all we talked about was LNG. Now it's because of, if we don't have LNG, natural gas. If we're not exporting LNG, natural gas, we're just keeping up with supply. And that doesn't even include, New York doesn't even allow the drilling for natural gas. So to me, that's just what's happening in the big picture. And the more micro bottom line is this stock market, to me, I'll end on this keynote. The one key thing that I've always watched, and I think is just kicking it around. I see this plunge in bond yields. U.S. Treasury yields at 2.2 right now, or just dropped about 20 basis points. That has been one of the best indicators for deflation and declining asset values in history. Last year, I was in Florida in February, and I remember telling my in-laws that the U.S. 30-year bond just dropped to the lowest price in the history of mankind. This was right before the collapse. It's happening again. It's happening on the back of the Fed, and crude oil is just part of that cog in the wheel. So if what I'm right, if just say stock market, it's up 10% in the year. I'm the S&P 500. Let's say it just mean reverts 10%. We're going to see crude oil in the 50 yen.
Yeah. Well, I want to talk about, that was good stuff. I want to talk about Bitcoin here in a bit too. So I was at the conference as well, and I've been getting more and more involved in that world. And my perspective on it has come from the natural gas side, and looking at Bitcoin mining and the different sources of demand for natural gas has always been fascinating to me. And then hearing about this arbitrage that you can take nat gas and convert it into Bitcoin and turn that into something that is, I think, at the height of the high water mark for Bitcoin prices, you were at somewhere close to 1,000% above Henry Hub by converting it into Bitcoin. And it's just this staggering kind of career altering thing that I found out. And I was like, this is kind of wild, because I have a natural gas marketing business. And so that's been something I've been very focused on. But before we jump off of crude oil, I guess do these trends, these deflationary trends, like how far back do they go? And to me, it's intuitive. It's like counterintuitive, because when I look at one thing I'll say that I've said before, and this is maybe just an oversimplification, but I look at when my dad was born, oil was $3, $4 a barrel. When I was born, it was around $10 a barrel. And so when my kids are born now, I have a 1-year-old, why will it not, 10x again in his lifetime, like it, more than did in my dad's in my lifetime? And it's just this counterintuitive thing. I feel like we're going to keep using it. I guess technology is the answer. But I just still feel like, even with the EV stuff, there's some serious regulators around the supply chain. I want to talk to you about metals at the end of this thing, and what we should be focused on, what's important for the transition, and maybe we can get into that there. But maybe in the final note for me, I hear everything you're saying is very logical, and I think it's probably true around the stock market. Certainly, if the stock market has a major correction, we're going to see oil pressures. But man, there's just something in my gut that tells me that we're not close to seeing the peak demand for oil, even with the push of the energy transition. But maybe that's against the grain.
Well, we
maybe
are.
It's just hopeful.
No, we have in this country. Total consumption of liquid fuels in this country is about 20 million barrels. Sorry, it was. Now it's below. Before COVID, it was about 20 million barrels a day. That's the same as it was 20 years ago. That's a paradigm shift. Over that 20-year period of time, we have GDP is probably doubled, CPIs, who knows, they double or triple. That's peak. And it's going forward. And it's just never happened. We've been able to rally GDP that much and have our consumption of the world's most significant commodity flat. So to me, and also what you mentioned is the price of crude oil has not gone up at all. It's the value of that piece of currency has gone down. And I say that facetiously, but it's a fact, because I remember describing that to my father and I discussing about the house he bought for, $10,000 in 1960 and sold at $200,000 in 1980. The house didn't get that much better. That piece of paper just became less valuable. And to me, that's what's happening. But it's not even keeping up with the rapidly increasing supply of technology. And so that's what I mean. So the rest of the world is going to follow our trend in terms of efficiency. It's just happening. And maybe, I remember being in London right before COVID, and they were saying, all the blacks, the taxis were switching to hybrids. A typical hybrid gets 50 miles per gallon. My Chevy Volt gets 90 miles per gallon. Plug it in. But to me, that's where things are going. And it's just the macro, the micro, everything to me is unfavorable for crude oil. So I love when I see Jeff Curry, which I consider a friend for Goldman Sachs, and one of their most bullish commodities is crude oil. I'm not saying if there's a stock market correction. There will be a stock market. It's just a question of time, and I think we just hit the bell. Now, that's what I'm on here for. My job is to have opinions, and I don't think the market's figured out yet, because bond yields are telling me that. Dropping 20 basis points after the Fed, they're going to raise rates, is the oxymoron of what I've learned in trading. And to me, inflection point just kicked in. Crude oil 70 handle, more likely to go 50. Bond yields leading. Stock market will be the only thing that matters. We'll be talking about 5 or 6 months from now when it just goes back to, guess what, unchanged in the year. It's just a matter of time. So we can rope in macro, micro, everything. To me, it's just, and copper's already done it. Lumber's already done it. Soybeans have already done it. Corns, they've all peaked. Crude oil is the one last commodity that's kind of hanging out. And I just expect that one morning I'm going to come in and Bloomberg TV is going to say, hey, Mike, we need to talk to you. WTI is down 5%. Why?
Yeah. Well, there you go. You heard it here. All right. So that's good stuff. We'll move off of crude unless I want to talk about natural gas. I want to talk about metals, but I don't know that nat gas is that as exciting to talk about as what I'm going to move to next, which is Bitcoin. I've been very focused on it. It's something that we are looking at all the different ways that my industry will be disrupted, particularly the natural gas industry around the Bitcoin mining side and the demand that could create. And that arbitrage, which I think is kind of once in a maybe generation. I don't know. I mean, the fact that you've got this source of energy consumption that's really the highest demand use case for energy, and then and it's totally mobile. You can move it anywhere in the world, and you can take it and you can marry it with the lowest value energy. And there's a lot of stranded and distressed natural gas in the U.S. You've got these legacy fields that are high, midstream fees, and maybe they're just not. They're going to get produced because they're old fields and they're going to put away, and some of them have been producing for 50, 70 years. But man, if you introduce Bitcoin into that world, it can get really interesting because they can be repurposed into off-grid power generation. And so I've been very focused on that, but that's how I got into the world. And then with that becomes a fascination around the price of Bitcoin, because now you say, okay, well, this is just another commodity that I can extract energy out of the ground and I can convert it into into Bitcoin. And so then I start to focus a lot on the price of Bitcoin. And it's another thing for me that's crazy about it is everything else we talk about, you've got supply and you've got demand, and then you've got Bitcoin where the supply is fixed and we know where it's going. And that was another thing that I thought through. I'm like, man, that's kind of crazy. So it's basically just demand. And then you look at that and we're growing at like 2x what the internet grew at. And around the year 1997, the network is just rapidly expanding. And so real quick touch on your background and how you started getting into it. You're putting out some great commentary on the price action. And then let's talk about where you see it going on the price side and why it's important for people to be focused on it, especially given the backdrop that you just described with the the Fed's doing in the money.
Start with the most important thing in any commodity that's ever existed in the history of the world is price. And I love when supply demand people tell me otherwise. I'm like, well, I come from a farming background and tell you, guess what? It's price. So I think Bitcoin's going to 100 grand. I think it's going to be this year. I don't think it gets much below 30. As we speak, it's around 36. And I think the biggest risk right now is what I described in the macro. I think we're due for a correction in overall markets. Bond yields are telling us that. Stock market might drop 10%. And guess what? That's a normal correction. And Bitcoin's part of that risk asset. I think it's going to come out of that much better, like gold and silver, and Bitcoin will do much better once we realize, okay, once this bubble is kind of stopped going up in the stock market, which is just a matter of time, then we have to have massive more amounts of fiscal monetary stimulus just to keep the tide stable, the boat stable. And that just kicks in for gold and Bitcoin, most notably Bitcoin. So I think what you described is really the increasing network size. And what I've got, one of my key takeaways from that conference was the mining. And like you mentioned, I met a miner who got to Bitcoin, and not a miner, who got to Bitcoin mining from energy. He actually is a neighbor of mine in Connecticut.
Yeah.
We didn't know that. We met there. And he said, yeah, I'm a power producer, and we were having problems with managing our excess power, so we started mining Bitcoin, and it really helped manage that, so it's kind of unique how people like you, even from energy, got to Bitcoin. I got it from commodities, and as I love speaking with a lot of my commodity people, once you figure out and get the supply-demand metrics, like, okay, supply's fixed, 900 coins a day until 2024, 450 until 2028, and drops to 225, whatever. Fixed, done, by code, can't change that. All that matters is demand and adoption. As a commodity strategist, okay, that's what I look at. I see bull market. What's going to change that? I don't know what's going to alter it. I just see dangling carrots. There's going to be a U.S. ETF. Yes, it's been delayed. Priced in the market. Issues with energy. Priced in the market. Because we all know all that energy is so. Once the narrative gets out there. I mean, I was on Michael Saylor's call the other night about the Bitcoin Mining Council. Once the narrative gets out there, and I mention it everywhere I can, most notably Bloomberg, once people understand that how good this is for the infrastructure, they'll get it. It'll come around. So knock off it's just a matter of time. And right now I look at Bitcoin, it's a discounted bull market, and I'm afraid now it might push 30 again if what I see happens in the stock market happens. But that would kind of be good, because it'll bring out more buyers, and it'll ultimately be very bullish for Bitcoin, particularly if the stock market simply does one thing: stops going up. Just imagine if a year from now it's the same price. There'll be no concept of tightening at all. There'll be the bond yields completely plunging. It just, on what's going to happen, the whole thing needs higher stocks. And the Fed just warned that it's just kicking in now. And, hope by the time we hit on Monday, we'll see that, bond market means something when it drops 20 basis points in 2 days. And, the high for the year was 250. Now it's 2% in 30 years. And to me, it's all about the 30. Used to love, that was my favorite bond to trade. You got to trade in zeros. I love trading zeros, because you just get, it's actually, that's the most leveraged market in the world, it's U.S. Treasuries. People think it's cryptos, nothing compared to what we used to trade in a bond option futures on Treasuries. You get thousands to one leverage. You just stop yourself out and hope you didn't blow up. But so to me, that's where we're going. Cryptos, and then I look at things like Ethereum. It's backed up to near 2,000. It's pretty good support. I fully expect Ethereum and Bitcoin to continue to rally, but I'm afraid, expecting the shorter term, we're going to see the macro pullback, and bonds are telling us that, and that's probably not something you're going to get from too many people at the moment. It's just kind of me. I've always been addicted to the bond market. It's the best indicator of everything, I think, and it's U.S. Treasury long bonds.
Well, everything in finance is priced off of risk-free rates and all those things. If you just understand the math of how it all works, that's just the driver. But what's crazy to me, and one of the things around Bitcoin, is looking at the performance historically, and it's pretty staggering. And if you look at like what I think was really the testament, that when people really want to knock on it and say, hey, is this? If you look at last year in this global crisis that we had. And I know that everything rebounded and it came back pretty hard, V-shaped, but man, Bitcoin was the best performing asset. And so it's like, this is will more people view it as a safer haven type asset to protect against inflation, to protect against other markets? And me personally, like, I'm there. You understand the technology, and I've really dove into the proof of work and the energy consumption, because first question was like, why is it consuming so much energy? And then I realized that this is the reason that it is the secret sauce, is that it makes it unforgeable, and makes it trustless and peer-to-peer, and it causes it to be, that's where the value comes from. And then you look at the infrastructure that's been built. I mean, there's just a staggering amount of infrastructure that goes into this network that upholds it. And there's the amount of just capital that's been invested in, people's labor and time and effort that goes into this thing. It is the definition of anti-fragile. And so to me, I think that it's definitely a safe haven asset in terms of long-term to protect against some of these themes. To your point about the currencies getting devalued. And if you look at the transfer of wealth is the last part of it that's really been crazy. I mean, I think Bloomberg put out a piece, and somebody said that maybe at 200,000 or some level around there, 200,000, it would be 51% of the world's billionaires would be Bitcoin, I think, if I read that. And so it would literally be the largest group of wealthy individuals on the planet if it gets to that level, which I think you probably agree at some point it will. And so it's just a fascinating topic, and it's disruptive across a number of different industries, including my own. I think it's going to continue to be disruptive. But man, it's liking the commentary on it. I hope you're right. I do think we could see some potentially short-term weakness, like you said. If the markets drop, then that's definitely something that people get knee-jerk on it. It's also interesting to see like these figureheads like the Elon Musks of the world that can have such an impact on it. But I think that stuff's just kind of, it's in passing. I don't know that long-term he'll be able to have that same type of power over it. But maybe any last thoughts on Bitcoin before we kind of move on? It just seems like something I could probably spend a whole
episode on. I think the bottom line people need to think about Bitcoin is it's one of those most classic examples of human nature I've ever seen in markets, and in a win-win way. For me as a strategist, I can't analyze gold anymore without including Bitcoin in that bucket. It's a fact that there's outflows in gold and inflows in Bitcoin. A lot of them are crossing. It's a question of duration. I fully expect that to continue, and it's a very simple narrative. Is if you're managing any kind of money on the planet, most notably bonds where yields are near zero, anything to do with commodities or gold, and you're not allocating a small portion of that to Bitcoin, your greater risk now has flipped to being a naysayer and to missing out and looking back from the future 5 to 10 years from now and appearing as someone who's lost in space. So you have to get in it to some extent. Now ETFs are not there yet. That'll make it easier. It's just a matter of time. So that's to trickle up. And to me, what's happening now is lower prices are bringing out that demand, and the more it stays in this range between 30 and 40 is going to bring in more demand. So to me, that's the bottom line. The question is how much farther it goes and what could trip it up. I don't know. I expect more the same. And again, there's
going to be a lot of buyers. I was going to say there's going to be a lot of buyers if it goes below 30. I mean, I've been buying it in the 30s, and I think that it's like, I bought when it was higher even too. And I'm like, the only regret I have of buying when it was higher is that I could get more now. Yeah. And I would have wished I would have bought more now because you could get more at these prices. But I think a lot of people feel the same way. So to your point, I don't know what could trip it up big time, but I think if it drops to that 30 or even in the 20s, I think you're going to see massive buys from some of these institutions.
A lot of people want to do that. I look at it as the best way to do it. It's traders beating themselves up. And believe me, I'm an ex-trader. I used to have here. But being an ex-trader, you really know sometimes get a feel. I would have lost money on this sell-off because volatility dropped so low. To me, it was a very bull sign. And then it dropped. So a lot of people got chopped up. But this is the speculators, the traders get knocked out. And the accumulators, most people say, I just want to accumulate and never sell it. They're just got bids below. And I fully expect there'll be more and more.
Yeah. I'm one of the accumulators. I'm kind of like, I've bought in and drinking the Kool-Aid around. This is a scarce thing. I think they said on the mining, I don't know the exact stat, but I'm pretty sure we're at like 90% of Bitcoin's mined. And I think by the end of the decade, we'll be at close to 98 or 99, whatever that number is, some really large portion of it. And then you got like 100 something years to where you got to stretch out that last percent or two just because of the halvings. And so you think about a scarce asset, that's about as scarce as you can. I mean, other than maybe real estate or land and certain, if you buy real estate in an area that's a very highly desirable area. But so once I kind of understood that, it made me feel I had that FOMO of wanting to own it and then not wanting to sell it. And so when I thought about it, this last drop, I thought, okay, well, if it dropped half, in my mind, I said, if it had doubled, would I have sold it? And I said, probably not. So I was like, okay, if it goes in half, would I sell it? Probably not. Just because if you have that long-term view, then, so that's good stuff. Well, moving on to natural gas, it's just been an anemic commodity, and I've spent my career doing a lot of midstream stuff, so infrastructure pipelines. I used to work for Chesapeake Energy, so at the forefront of drilling for natural gas early in my career, and we were in the marketing and commercial group, so our job was to get it transported and get it sold. And man, it's just been like this perpetual state of just getting beat up basically my entire career. I'm about 11 years in. So, all I've seen it is in this, and where it's at today, it feels really, really good to be honestly, I think if it could be in 3 to 350, I would be very happy. I think a lot of our customers and clients we work with that are producers would be very happy. But, for example, going back to like 2019, we were doing a lot of work in kind of the mid-continent, and on the micro level, it was very constrained because you had a lot of private investment into new drilling, new wells, and it was painful. I think we averaged like in basin, including the differential, I think we averaged like $1.20 or something in that range, and it was just a painful year. And then it didn't get much better in 2020 because of COVID, and now we're kind of, there was even times in 2019 we were below $1. We were trading at 50, 60 cents, and Permian was negative. And so now we're kind of at this $3 range, which feels phenomenal. Should I feel good about $3 like it could be here, or is this a false hope that we could stay in a range that's 3 to
I think it's stuck in a range until the cows come home. I mean, as we're speaking, I was just pulling up the chart. Spike, we had that spike. Remember that cold winter 2014 got to around 6, poof. Responsive sellers. Then we had that spike 2018, poof, responsive sellers. Now we're here. Maybe it gets to 4, it could get there. But it's way overweighted with too much supply of the U.S. and just not enough demand to sop it up. And I think it's the most unique example because it's natural gas. What you're mentioning earlier when I put out, it's the world's deflationary leader because it's the best measure, it's the benchmark on a global scale for energy and electricity and heat production. And it's even being armed away. I mean, it used to be the cleanest fossil fuel. Now we're trying to replace it with other forms. I'm like, okay, I get it. But I mean, natural gas has just made life for humans so much better. by pure technology.
Absolutely.
I mean, I fully respect it as a human who doesn't like to freeze to death in the winter, which humans mostly die in the winter. It's made our lives better, but we just have so much of it. And it's just classic technology overwhelming the old Malthusians of the past who thought populations would overwhelm demand, and that's it. So I love to go there. Versus, to me, it's a commodity guy. Everything has to appreciate versus a spot value goal compared to rolling futures. It doesn't matter. And of course, you can't invest in natural gas. You get crushed in contango. Yeah, it's a backwardation right now, but the same price since 1996 is what I have on my screen. That's massive deflation. Sure, we've had a bounce. And it's the most, so I look at it like, okay, it's got to sustain above 4. Why is 4 significant? Yes, it's a round number, but that was the level from 2009. The first year the Fed went 0 and we really kicked in with QE, and natural gas's average price was around $4. So if there's any sign of commodity inflation at all, the world's most significant measure of electricity has to stay above $4, or else it means nothing. It's just deflationary. And again, is that just a piece of the paper rallying? So I have to, for me, everything has to go up versus gold in terms of commodities, or it's not a bullish commodity. And it's down, natural gas is down 80% over that time frame. So, and one thing I really enjoy is being from an investor stand, the institution investors want to invest in commodities. I'm like, please, I've seen so many people lose their jobs. And I remember the whole team at Barclays that were the premise just completely decimated. And the people I met at CalPERS and CalSTRS and all the pension funds, endowments, all decimated because they try to invest in commodities. And I say, well, just stick with the metals. Gold's the benchmark. You can invest in the physical and store it. You don't have to roll futures. And if there's any commodity that's not outperforming that, then don't bother. Why? And to me, that's the problem. Is some of these commodities invest in natural gas, and they invest in the futures, and they roll the futures. And what they do, what's happening sometimes is they boost that price of crude oil above the cost of production, which incentivizes more supply, which is bearish. I heard someone told me the other day, all these influencing commodities are bullish because they're self-fulfilling. I'm like, it's the opposite, because they don't create demand. They actually create supply. They're in futures. They're paper. They roll. And I remember I had to do a deposition in front of the CFTC on this. And this was before Obama became president. And I pointed out, they were saying, that it was back then when they were saying, oh, all this commodity investors are creating inflation in energy and food. And I'm like, gentlemen, it's the opposite. Here's why. Did you ever study supply and demand? It's called elasticity of supply. And I'm getting there because a lot of these investors will boost the price of futures and natural gas, and it just creates more supply because it gives incentive for more of that. So to me, that's that part of that, and it's the domino effect that's just bearish for commodities. And money flowing after the wrong thing.
Yeah. For sure. And natural gas is one that I focus on a lot. And the thing that's crazy to me, and so I'll argue, we have this huge amount of supply. And what I always said was that, look, a lot of these reserves, they're not real at, sub $2 gas, because you can't produce them and make any money. They're below the cost of production. And it's a lot of these reserves. But then you look at that's not always, it doesn't matter, because you got companies with debt. You've got companies that have invested equity. They got to produce to be able to make the returns. You've got guys that are hedged. You've got all these things that are beyond just the cost of production that drive the decision makers at these companies, and they're making decisions quarter by quarter at the public companies. And so for a long time, it just felt inevitable to me that we would have to be at a kind of $3 and above price, or at least $2.75 and above price, or it just doesn't make sense to even produce a lot of this stuff.
I thought so too. I didn't want to interrupt, but what I thought is all this demand. Everybody I knew was switching to natural gas from heating oil, and I was wrong. Right. Like, okay, I get it.
Well, the demand has been the shining star. I mean, if you look at the demand, it's great, and it's like, they say the cure for low prices is low prices, and it makes a lot of sense. And then you really look at, I think if you could take the politics out of the energy transition, I think at the governmental level, we should be pushing more natural gas. It's the reason why. Well, it's that plus efficiency, but efficiency gains plus natural gas and the shutting down of the coal plants for power gen is why we've been the leader in reducing emissions in the world. And I think that we could meet a lot of the goal. I'm this is not a hot take for me. I've put it out a bunch that I think we could meet a lot of these goals around the climate stuff and around emissions reductions through nat gas. I think a lot of the infrastructure is already in place. I think there was a big push when I was at Chesapeake to do the natural gas vehicles. It never caught on. I didn't have the mass adoption, maybe the economics. You got to convert your vehicle, and that's expensive. But my point is that I think it could solve a lot of problems. I think it's super abundant and cheap. It's cleaner. Maybe couple it with some sequestration on the power gen side, and you're really talking about some reduction of carbon footprint. But it's not going to get pushed. It's not going to get pushed through tax credits and subsidies and things like that. It's going to be wind and solar, and that's fine. And I talk about that on this show too, and we explore those topics. But my bias is nat gas. I hope that we can, from a selfish standpoint, because I work in the industry, I hope that we can keep it at kind of the $250 to $350 range. I think $4, it starts to get destructive around people doing crazy things. I mean, you get rigs going in the Haynesville or one of these plays, and the next thing you know, you're going to have too much supply. So there's a sweet spot. Yeah. I think we're in it. My hope is that we can stay in it. But
I appreciate talking to people like you who are really in the weeds. I'm more the macro and commodity, and I used to be in more weeds and the grains and treasuries. But the key thing, I think, what you mentioned is this is all happening with us doing nothing as human beings. The rapidly advancing technology is right. Solar, yes, it's been pushed. I have solar in my house. I get electric cars because of subsidies, but it's now cheaper in many places to produce electricity. And then, of course, all the battery, it's just storage. We all get that. I mean, Bitcoin mining helps manage that peak supply. It's happening without us doing anything. It's just, and now this government in the U.S. is now pushing it forward, which I think is wonderful versus the last one, which pushed back on an organic trend. It's just back to, that, like I mentioned, that book, The Price of Tomorrow, and some of the books I read about, it's all happening. Technology is advancing so rapidly. It's just a matter of time. So I look at natural gas. That's great. It's wonderful for the U.S. It's done so much for it. I want to lead on this is what's happening organically in that space. And not so much that space, but just kind of relate to what's happening organic. If the U.S. does nothing, we're crushing it, like we kind of did in natural gas. We crushed the world. I mean, we have so much excess supply energy in this country. We're the largest producer and exporter of energy now and agriculture. Why? Because we're just efficient and we're Americans. We get it done. Also,
well, it's free. Exactly. It's free markets, and it's also that we have mineral right. We can actually we own the minerals, right? And so that's a huge key that people overlook. But I think it's a reason why we're so good at it.
I'll end on this. That's happening digitally. The digitalization of money is completely enhancing the dominance of the dollar, i.e., tethered stablecoins, the most widely traded on the planet. They blow away the volume of Bitcoin, and we're doing nothing. It's happening organic. China's just trying to catch up. They want to do a CBDC. There is not one decent coin that trades the Chinese yuan. I haven't found it. No one wants the yuan, but they all want the dollar. So if the U.S. doesn't mess it up, we're going to crush China in terms of this next Cold War that's really developing. It's all happening organically as long as we don't mess up the technology. Embrace it.
Yeah, exactly. I'm surprised the U.S. This El Salvador announcement with the Bitcoin thing. I would be. People always ask me, is the U.S. going to make Bitcoin illegal? And my response is they're probably going to start mining it or owning it themselves. I would think more likely making it illegal. Maybe not. Maybe that's.
We have Bitcoin futures. Yeah. We have Ethereum futures. Coinbase went public. Right. The amount of infrastructure in this country that's related, we saw it at Bitcoin 2021, is massive. If you want to get voted out on office and booted, go ahead, try. It's just not. It's like it's a hypothetical that's such a low probability. Why even bother mentioning anymore? Let's move forward. There might be poor regulation, but you can't ban it now. It's open source software. We have free public, it's free speech on a global scale. Now in China you can't, but the fact that China is pushing back is all the more reason U.S. will push forward if we're smart enough, and I think we are.
Yeah. Yeah, there's a big news today. They're ordering a bunch of the miners to shut down, and we didn't know when these first reports were coming out. I'm talking to some guys that are pretty close to it, and they're telling me it's real and that Chinese miners are trying to get out. And I think that the U.S. could be a huge haven for, getting back to the mineral rights, we're like one of the only countries in the world that allows people to have that, to be able to own the minerals and to be able to exploit those minerals. And so that if you look at the energy extraction involved and needed, and then you look at a lot of these countries that the minerals are state-owned and that the power infrastructure is state-owned, a great place to mine Bitcoin would be the U.S. We have strong personal property rights here. It's one of the main foundations of the country. And you can do it off grid, you can do it on grid. I think on grid may have some troubles, like New York with the recent legislation that got shot down. There could be more things. I think that opens the cracks and cracks open the door for other people to try to do things like that. But I think certainly energy producing states like Texas, Oklahoma, I think Wyoming's embraced it. There's stuff going on in Kentucky at the legislative level. There's going to be a lot of. There you go. What I can't see
I'm
it.
sorry. I didn't want to. I'm from Illinois. And you know, I got that little draw. And
Yeah.
I didn't mean. I'm sorry, I didn't interrupt. I thought you could just, instead of looking at my face,
No, good.
from all my relatives in Illinois, the fact that Illinois is embracing Bitcoin mining is like, wow. I mean, that state that's taxing you to death is finally figuring out, maybe if we embrace technology, we can beat the other states that are figuring it out.
Right. Well, exactly. Well, the Illinois basin. So here's the interesting thing: is that it's going to be a hotbed for Bitcoin mining because there's virtually no nat gas infrastructure to transport natural gas, but yet they have oil that can be produced there. And there's guys producing oil, and groups. I say guys. There's groups producing oil, and on the Kentucky side and on the Illinois side. And traditionally, you just flare that gas. You flare it. I mean, and it's happening today. And I know of projects right now, boots on the ground, people that are looking at these things, and that it's why flare it when you can convert it into digital gold, and it's happening already.
But it's also much more efficient. Flaring is very efficient, but it's a high performance turbine that generates electricity is so much more efficient for emissions.
Right, exactly. And so let's move to so we're getting here to about 45 minutes. Try to keep it under an hour, but we, so the energy transition, you've got the move to, I think that last comment around efficiencies and everything that's going on with the renewables getting onto the grid, and you've got the EV, and there's a lot of, I think in my opinion, people gloss over the challenges that we're going to face on the supply chain as well as the infrastructure side on the grid. There's a lot of money that needs to be spent, and maybe that'll be driven top down from the federal level to get the dollars spent. But one thing that's fascinating to me is the supply chain. And if you look at how many EVs they're predicting that are going to be on the road and how many solar panels are going to get built and all these things, and you start to, I'm not an expert on it, but the surface level things I've read and the things that as I've explored it, it looks to me like there's going to be some real challenges to meet that demand. So as a commodities person, what are the most important, for people that don't know, what are the most important metals to focus on? And what are the trends that you're watching, and how do you think
there's always disruptions in technologies, and the bottom line is we will work them out, and it's happening at the fastest pace in history, and a lot of it's because it's just cost effective now. So the main metals are gold, silver, platinum, palladium, lead, nickel, and zinc, just the metals, just broad metals, definitely copper in there. But I look at the big picture is you got to have Bitcoin, you got to have cryptos. So I published a thing the other day, is the ideal index I looked at was the Bloomberg All Metals Index combined with the Bloomberg Crypto Index, Galaxy Crypto Index, 80%, 20% rebalance quarterly, something like that. But you got to have Bitcoin in there. And the bottom line is, I know this because I've done it. I have solar panels in my house. I installed them 7 years ago. I tried to install a wind turbine and it broke when the wind got strong. There's no moving parts. The technology is awesome. It's just a matter of time that when every home any structure is built on this planet, it will have the ability to absorb solar and convert it to electricity. It's just a matter of time. All vehicles will have some form of, if it's not hybrid, I have a Chevy Volt, which is basically a public highway. It's perfect for the current structure because I can drive to Illinois in a heartbeat. I don't have to worry about the range anxiety. So we're not there yet, just a matter of time. So to me, embrace it. Try to focus on your investing on companies that do the best in that space, and that's what I do. And I don't know what's going to push it back, and that's why Republican or Democrat, I'll just point out as a commodity strategist, what this current administration is doing is just accelerating organic trends that were in place with government support versus the other one that pushed back.
Yeah. I'm just wondering, will some of these metals that are needed to do, and I'm not an expert on the metal side, and it's getting a little bit out of my expertise, but I just am wondering, will there be price runs on some of these, metals that are needed to do this energy transition, whether that's copper or you got lithium or whether it's, these different things, and will that slow adoption? And then maybe you couple it with rising interest rates. We talked about interest rates earlier, but if interest rates were to materially rise, it'd be tough to finance these $50,000 EVs with a 6, 7, 10% auto loan. And then you got, the price of the batteries is going way up because the demand's so high. And I just wonder, could there be some, will the movement happen as quickly because of some of these commodity-driven price implications that could happen just from the demand spiking so quickly? Or will we be able to figure it out via technology?
No problem supplying. Copper just produced the world's most significant metal. Dr. Copper just peaked at $10,000 a ton. It's already down almost 10%. It's down 10%, around $9,000 a ton. There's just massive supply. We had these issues with Peru and Chile and potential resource nationalism. We're over that. Interest rates are not going up; they're going down. They've had a short short-term blip, and that's what I like to point out, is all you need is a little a correction in the stock market and interest rates will plunge. Just, gosh, to me, that's still a dream, a commodity bull market with interest rates, demand pull for interest rates. I look at the 30-year at 2%, and I see deflationary forces, and only inflationary if the stock market keeps going up. So I'm not worried about that at all. At some point, there's going to be an end game, which is why you have to invest in gold, Bitcoin, precious metals, but
yeah,
right now, I don't think if we just get what I just thought and think tweak right now, that is, we're getting a little Fed tweak in the end game, then this is more about the correction, and supply for commodities is no problem, because remember, elasticity of supply is still the most powerful force in commodities and has been for most of history, most notably the last 10 years. We get it. We come out, we find technology. I'm even hearing about new technologies out of Canada to create copper that's just so cost effective. And
right. Well, it's crazy because they only have so many options around what to do whenever you've got, for example, how do you stimulate things, and how do you? It's like you can print the money, you can lower the rates, and then if the government has big deficits, like they can issue more debt. They're not probably going to want to raise taxes in a meaningful way. And so if you look at all the different options we have around what we can do, it seems like the path of least resistance is just more printing money, keeping rates low. Yes. It's like the only way out. And if that's the only way out, then there's only one way out of that, and that's Bitcoin. And
well, you got to have some of that.
Like gold, right?
And the ability to be able, you mentioned real estate earlier, you're involved, the ability to be able to borrow in this country at 30-year fixed, and they can't raise your rates at the lowest rates in the history of mankind, and be able to buy a physical asset where it will more likely to appreciate, but if rates go down, you can still refinance. Is just a win-win. If you have that ability of good credit, it's prudent. It's imprudent not to do that. It's imprudent not to buy Bitcoin and allocate, and I think it's becoming somewhat imprudent to overweight equities. Now, they've been winning for 10 years. I get it. I haven't been completely correct, but at some point, the Fed just signaled to us that they're willing to start taking away the punch bowl.
Yeah. Well, this has all been good, Mike. I really appreciate it. Maybe, we're starting a new kind of weekly recap show. We hit on prices. We're doing some live stuff lately. We've been going live on like LinkedIn. I got a couple collaborators that I'm working with. Maybe in the future you can hop on one of those and give your commentary, just topical. If I could steal 10 minutes of your time in the future, but this has been really good, and I think the listeners will really enjoy it. Most of the stuff I'm doing is closer to the less about the macro and more about the industry and the micro, and talking to operators and talking to people that do things. But this has been
well,
really
thanks
good.
For having me. More macro, but it's in a great environment where everything's going macro. I like to point out the 40-quarter correlation between crude oil and the stock market's the highest in history, 0.7, and I only go back about 100 years on that one.
Yeah, there you go. All right, Mike. Have a good one. Have a good weekend. This is just a timestamp it. This is the 18th. This will come out June 18th, 2021. Will come out on Monday. And I, again, appreciate it. And we'll hopefully talk soon.
Good to be with you.